together, the idea is, hey, we have some bad news coming in here, leaking in, slowly coming in, trend wise for sure. Then look at what happened to the equity markets. They rallied in support of that.
Yeah, I think
So
it's what you
yeah,
were saying before. Bad news is good news.
yeah. I mean, that could be it. Things are slowing down. I do have a graph of that ADP. I'll just pop it up really fast here. And I don't know that it tells us anything other than if you kind of look at this kind of, I don't know, linear regression or extension, if you will, we're back on track post COVID. So that's a good thing. But this report was about expectations, and as you mentioned, the last report of 192,000 was revised downward again. No surprise there, 188,000. So back on track, but didn't quite meet expectations. Oh, let's see what the major stock index futures did based on that news, Tom. Here's the E-mini S&P catching a bid up 22.
Yeah, and keeping above your moving average, right? So that moving average that you have, that 8 period moving average, exponential moving average, nice launching pad almost after a couple of two doji like but bullish supporting wicks. Uh, Follow through today with that jobs report. Now we're targeting, I think, that previous high that we saw back on the what is it, 23rd of May.
Yeah, I would draw area resistance here, a rectangle right here, and just it'll be very interesting. We kind of scraped up against it, bumped up against it for I don't know several days. A little bit of really nice retracement, kind of regular retracement. We kind of got stuck at volume weighted average price, my anchored VWAP, which started at the beginning of the rally, and then these moving averages though, this eight, like you said, now we're above it again for the third close in a row, and then we're way above the 20. So, is it 20? Yeah, 20 EMA, and no wick at the top. Right, buyers are in control right now. This is only time 19 handles away.
Yeah, right. We're within one, well, about two no, one ATR from today's low to that bottom of that rectangle. We're halfway of an ATR through to where we could get to the bottom of that rectangle. So, um, possible today to get there. And you think about it, Jim, we have two more jobs reports coming out this week, tomorrow and Friday. So if
Yeah,
those reports come close to following these minor reports, I would say
yeah,
ADP and um, the jolts are minor compared to jobless claims and unemployment report. Now, if they show kind of the same thing, we might in fact get past your rectangle.
yeah, yep, yep. And we got some more stuff coming down the pike. Everybody, let's go to the micro Nasdaq. Micro Nasdaq up 136 right now, kind of looking pretty similar here. We're attacking these all-time highs. I'll put the rectangle up there just so we could see it a little bit better, and it's the same story.
Yeah, 19,000 target. I just psychological number 19,000, good as any place to be. Um, can we get there today? Well, sure we could. I think. But with the news that's coming out, I don't know. I don't know if that'll move it up enough to get to that rectangle to get to that 19,000 level.
Yeah, I agree. That's a big move up. There would have to be a lot of exuberance here, but still, no seller's wick at the top of this contemporary candle. And I'm kind of like bringing in my inner Dan Gramza from yesterday, Tom. I loved it when he said, "Look for on long-term charts, look for these big shadows at the bottom of the candles, because that's going to tell you buyers are really happy to get involved down here, right? And we have one, two, three right now prior to today. So that I think that was pretty good advice by him.
Yeah, yeah, no, that's great. And see how successively those lows are increasing. It's almost like they don't want to get left behind, right? They see this train is moving up and they want to get in.
Yeah, yeah. let's keep moving. Dow is finally trying to catch up here, Tom. This might be the fastest, in my opinion. This might be the fastest catch up market if we get into that, bull gear again. Right now, though, we have a really nice kind of retracement. VWAP is flat. I got to move it over one day, and a little bit of a bit on the upside.
So on my chart, Jim, I have also the Ichimoku cloud, and my anchored view app comes in a little, I think, higher than yours, just because I have adjusted data. But I see a whole bunch of confluence at that 39,000 level. Couple of three moving averages all coming in at that same area, including a medium, what we would call medium term on a daily, which would be the 50-day moving average, all coming in right around that 39,000 level. If it breaks through there, I think we start targeting the highs, right? 40,000 is back in play.
Yeah, and there's a little baby shelf here we got to get through. Just highlight that right there. We had 3 days where we kind of stuck there, and
Now
that's
remember,
approximately. Yeah.
one of those days was a holiday, right?
Yes, it was. It
Right.
was Memorial Day.
Memorial Day. So
Yeah.
yeah, I think that you're right. We do have to get through it. I don't
All
know
right.
if it'll be difficult to get through.
All right. Fine. I hear you. That's a legitimate comment, right? Because it wasn't really a trading day. Everything was closed. So I'm moving my rectangle up. Good point. All right. Well, we'll see what happens here. Again, a little bit not as big, not as dramatic as a bar so far today. But again, you have at least 2 days prior to that, those big wicks, those big shadows at the bottom. Again, suggesting buyers are saying, nope, 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 let's go.
Yeah.
Russell 2000. This is fascinating. I have to move this down a tad bit, but not much. I mean, we're literally still in that wedge triangle, rather.
Yeah, and this to me suggests that maybe interest rates aren't going to be cut anytime soon. And leaves open the possibility of hiking rates. Now, I think that's a real long shot, and we could probably look at the probability matrix and they'd say, "Boy, you're nuts." But um, this to me, when you see the Russell not performing like the other stock index futures, even though today it's up 0.5%, which is better
Yeah.
than the Dow, better than the E-mini S&P, just looking at where it is in its history, we're talking about a declining, a downward triangle, a descending triangle. We're not
Yeah.
talking about that in the other stock index futures. So to me, this is really about interest rates.
Yeah, I could see that. I mean, we have that piercing line of the previous day's candle. We're getting there, but we're not there yet. Fed funds tool conveniently loaded here on my screen, Tom. Let me just go to the probabilities tab and see what it's thinking. Um, so to your point, yeah, we're still tracking about a 50% chance we'll have a rate cut somewhere in this matrix, right? 30% chance we're sticking at 5 by December.
So that
Hang
would
on
be
a sec.
one rate cut, right?
Yeah.
Yeah.
Well,
So
right.
so the way I would look at it, Jim, you did a great job there. Right now, December's pricing in two cuts with the teal box where it has the biggest
Yeah.
probability. But if you move it over like you did to the 5% to 5.25, you sum up everything below it. That's a 93 one rate cut by the end of the year,
Yes.
right? Whether it
Correct.
comes in September, November, December, okay, those
Right.
are the other probabilities. But
Right. In other words, there's a 7% chance we will not.
right, exactly.
That's a better way. That's a better way for my brain to work. Okay. Uh, and then we got little baby percentages here that we're going to have a rate increase. But so two on the table between now and December so far. So we'll see how that goes. Or maybe at least one. Who knows?
Yeah.
Anyway, and this has been kind of solid the last couple days.
Yep.
All right, let's keep moving here. Where's my face at on the screen? All right, let's go to gold. Gold is up 13. It's back. This whole idea of Tom, this idea of risk off, forget about it. This is risk on. We have gold, we have equities rallying, we have energies rallying, bonds are rallying, and gold is kind of right at those two exponential moving averages.
Yeah, and so today you're right. It's green. It's a lot of green on the market analyzer. But you're right. The gold is right at those two moving averages that are converging, pinched between your support level and your VWAP from that anchored VWAP from the top of the trend. This is a consolidating market, right? This is consolidating market, and so I would say today maybe a little more bullish than bearish, but not much. I'd be open minded.
Yeah, all right. I'm with you on that for sure. I mean, I put a rectangle at the bottom here. So support starts about 45. Then resistance, I'd probably put another rectangle up around yesterday's open, 73.
Mm-hmm.
So that's not that huge of a range, $17, but it's still a range. My math is correct. I don't know. Let's stay with the metals, Tom. Let's go to silver. Silver had a huge sell off. And right now it's just kind of pausing, resting, I think. I don't know if it's tired or not, but it looks like it might be resting.
Yeah, this doesn't look very, very reversal. Like it's in a reversal mode. I mean, yeah, it's a green bar, but it's still trading in the lower 20% of that candle before it. So
Yeah. Yeah. Oh, yeah.
I would say in the overall downtrend, you might be looking for areas to go short. But if the day is an uptrend because everything's getting an uptrend, it'd be a counter trend trade if you go long. So to me, silver is one to watch out for. Not in a great way, not to participate, just be very careful.
Yeah, no, for sure. I'm just going to put a horizontal line, Tom, and Mike's going to be happy I did this at $30.
There you
So
go.
we're getting it's a kind of a psychological number, right? That $30, right? It's $30 silver.
Yeah.
Yeah. If you buy your American gold silver eagles, it'll probably cost you $50 for each one.
That's what what that's interesting you say that. I was looking at an auction online that had some coins, 1 ounce of silver, and it was different coins made by a mint but not official currency, right? Just
Mhm.
commemorative coins, and they were going for over $35.
Yeah, oh, yeah.
To me, that's like, okay, that's not the way to invest in silver.
Well, and it's been like that for a while. And I asked, I don't know, several months ago, I asked Bobby Icino what he thought about that, and Bobby said, "Well, it's just simply it's a supply issue.
Yeah.
So that's why they're getting that premium. I mean, that's a big, a couple of years ago you could have bought them for 15 or $17.
But I think it's also the premium of getting the likeness, whatever that, it's all the stuff that goes into producing a product, right? So the likeness, if you have to license an image or something, right?
Mm-hmm.
The marketing, the packaging, it just blew me away how much more. I mean, we're talking 35 and the auction wasn't even done yet. Probably went off at 55 or $60 for 1 ounce of silver. I'll pass.
Um,
I'll
yeah,
pass.
yeah, me too. Yeah, and yeah, there's better ways to invest, right?
Yep.
Including
Yep.
here. All right, let's keep moving. Let's go to Dr. Copper really quickly here. Well, again, a little bit of a pause. We have that measured move that we made. I don't know when we did that measured move, but we did a measured move. And copper right now is, again, it's a pause. We're nowhere near the piercing line of the previous candle. We'd have to get some momentum for this to be a key reversal.
Yeah. Right. Right. Yeah. Real big momentum, right? We'd have to. Well, I think actually you could say it's a key reversal now, but it's not very strong, right? Because it's a
Yeah,
lower
yeah, that's
low
a good point.
and a higher close. But it's again that idea of where are we trading? We're still within the
Right.
lower 25% of that candle. It's not very impressive.
Right. So, I mean, my bias right now is a little bit neutral just because everything's kind of green on the board, but I'm not going to be really overly aggressive trying to get long here.
Yeah. Yeah.
So, all right. Crude oil. Man, we are just moving along. Time is like we're like on time today, Tom.
Yeah. This is great.
Yeah, for sure. Today, and don't let the color of that candle fool you. Um, again, this whole crude oil thing is very is very very interesting. And I've been this whole kind of break in price kind of befuddled my mind. And then I got some emails from John Kemp from Reuters, and actually he's if you want to get his daily John Kemp's daily newsletter or link email with links in it with data in it also, just send us an email to learn@ninjatrader.com, put John Kemp in there. It's really good stuff. But he was suggesting that, and this was Reuters also, that OPEC plus has switched its focus to stabilizing or even regaining some of their market share lost in a couple years to U.S., Canada, Brazil, and that makes sense. If the game shifts from, hey, we want to try to get $100 crude versus we want to gain market share, which could more market share, more revenue. That's a strategy shift that seems to have happened, and so just to kind of think that through a little bit, lower crude oil prices makes it harder for the U.S. shale sector to be profitable and to keep rolling there too. So seems to be a strategy shift here, and now we're at 73.60.
Right. And that's a longer term view, right? Because you're sacrificing what you could get for oil now or relatively soon for the longer picture, which is when prices do start to go up, whether it's due to geopolitical or demand, when the market decides to fire up again, you've got a bigger market share, the oil goes up, then you start reaping the rewards.
Yeah, it's almost like a classic. Let's undercut pricing on our competitor, get the customer, and then we own the customer, and then we could adjust later on.
It's almost like go hot dog, right? Although it's probably nothing like that.
I'll tell you what, it's
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers
Start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Later.
All right, we are back. Natural gas, daily chart, consolidation, sideways price action right here. Just keep trading around that 8 exponential moving average. The 20 is still kind of moving upward, and the RSI is kind of lame. It's 56.
Yeah, we're in this trading range, which is nice that natural gas has a trading range. It seems to have trended and then consolidated, turned around over the last few, more than few months. Big bearish engulfing yesterday. So, is there follow through? Not really. We see a little bit of a reversal today. So, we might see a hot dog effect coming if natural gas gets a bid. I don't think it will, although the the EIA petroleum report might have an impact in natural gas if those numbers really surprise, because natural gas is a byproduct of crude oil extraction. So sometimes there's a little bit of residual activity in natural gas. But this is looking certainly, despite today, I think it looks a little bearish.
Yeah, right. And that again, this piercing line idea, actually the piercing line's probably about the same on both the candles, maybe not, but we touched it and that was it. So I'm neutral. I'm neutral today. I did find this report yesterday. I thought it was interesting. This was from the EIA, Energy Information Administration, which is part of the Department of Energy. And they're really, this is a great website, EIA.gov. Has all sorts of articles and analysis all throughout the whole website on everything energy related. And I just thought this was kind of an interesting story that they wrote yesterday, talking about how volatility is kind of slowing down in this marketplace.
Yeah, I mean, you go from $11 to $2 or less, right? Um, there's not enough points, I think, to have the same volatility at a $2 natural gas than it does at 11, right? So, that's an interesting report there. But we're seeing an upswing. We're seeing a little bit of a gain back in natural gas.
Yeah, and then nominal dollars versus real dollars were there. I mean, this whole post-COVID thing, if you want to blame COVID on this, really kind of created this outlier chart. Now we're still way lower than the average here, but right now I think maybe we won't see as much volatility now that we had this rally going on. So this was kind of a cool. I'm gonna shoot this over to Mission Control to shoot this over to you guys there as well. And as I'm doing that, Tom, I noticed who's the first to chime in today?
Oh yeah, today, Cos P and Paulie H are the first two to chime in. We have two places to chat, YouTube and ninjatrader.com/events. And they were the first two. So Cos P and Paulie H, thank you for being the first ones in. You get a special shout out. We appreciate you.
Absolutely. Cos P, Paulie H, thanks for being here today. No doom and gloom emails from Paulie today.
Yeah.
Anyway, good to see you guys. Thanks for being here. So E-mini S&P opening bell just you heard it ring. You heard it ring, folks. We cruised through our one time like it wasn't even there.
Yeah, right. I mean, it didn't spend much time there at all. Um, this is looking pretty bullish with not a lot of news left, right? We have 9:45, we have 10 o'clock, and then we're pretty much just trading whatever comes our way. So this will be interesting to see what the institutions do. Do they bring it back? Is this a little bit extended? I'm looking. It's just been buyers the whole way since about 5:30. Imbalance has been on buyers, and that's about when we broke out of yesterday's range, yesterday's high. So um, we'll see where this goes from there.
Yeah, big sell-off happening right now, relatively speaking. But at 9:45 is going to be a big deal. PMI composite flash. When they put the word flash after it, it's like, all right, this is their first estimate, if you think of it that way. And then the final number is the revised final number. That comes out subsequent. In ISM services, though, this is going to be a big deal at 10 o'clock. And I wanted to, while we have a couple seconds here, just wanted to share this chart with you. We talked about ISM manufacturing yesterday in detail. We didn't really talk about services that much. And services is is the same story, but a different story, right? We've been over 50. We've been over 50 most of the time since May of 2023, right? So that was, positive. But since the last 4 months, it's been decreasing, 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 decreasing. Finally, we have a sub 50 print for April. So this might be an interesting services number that we're going to come out. Is it going to continue this downward trend or not?
Yeah, and I think that story is important because really the services has been saving these numbers, these composite numbers, right?
Yes.
Manufacturing has been trending down much before services. Services would lift that number. If services start to fall below 50, then watch out. We might start seeing the composite a little bit lower than expected, and another point of information that might say maybe the economy is heading for a little bit of a pullback.
Yeah. Yeah. Well, the opening range is kicking in now 245,000. So not a huge start volume wise, but we're early. It's only 2.5 minutes, 3 minutes into the first 10-minute candle of the opening range. And we have an opening range established so far, pretty much. And R1 is we're flirting with R1 again on the downside.
Yeah, and we've seen these pullbacks even in this trend, right? We've seen actually this is probably what I would call the third pullback in this uptrend that we've been seeing since about 3 a.m. It's a little bit more extensive just because there's more volume and more participants. But I don't think we have to really worry about it until we start taking out that icicle wick that we saw, right before 9 o'clock. If we can start to get there, then I think maybe the trend is neutral to range bound. But right now I'm still bullish on the E-mini.
Yeah, no, I hear you. Is this the icicle look you're talking about right here at 8:30 to 8:40 candle?
Exactly.
Yeah. Okay. All right. Well, let's see how it goes. I mean, we're at a 37.5% retracement, which is, kind of textbook normal so far. The volume profile on the left-hand side is very immature. In other words, it's very wonky right now. We do have a point of control pretty close to where we're trading at right now, but there's not a smooth distribution of prices right now or of volume right now. It's kind of jaggedy. So it's not helping me that much other than the one standard deviation of these prices, a volume profile is above previous sessions highs.
Right.
So I think this is where this market gets into trouble. I think this market gets into trouble, as soon as we get south of that 62.5 into that zone right here. But again, it could hold. Who knows? But I have a warning ellipse, Tom. I'm gonna call that a warning ellipse.
So that might be in a micro. It might be a good 2 or 3 unit trade, right? And we're going to explore trades after the 10 o'clock hour starts. But you might see something 37.5 right here go long. It kind of stays within that uptrend. Put your stop in where Jim noticed the bottom of the value area, which is right near that 62.5. You could also look at it as a second entry long, right? If you're in it for a longer term.
Yeah, for sure. For sure. There, yeah, a couple of different trading strategies there, but let's not put the horse before the cart here. That's
Or the cart before the horse.
we don't want to do that either.
Right.
Right. We do not. Just stay away from the horse. The horses are beautiful, but they kick.
Yeah.
A micro na-
Have you ever ridden a
Nasdaq.
horse, Jim?
Oh yeah.
Yeah. Okay.
Yeah.
Good.
Yeah. Yeah. A couple of times. We coming from the growing up in the urban inner city of Chicago, there's not a lot of horses.
Right.
Do you remember that one guy though who did ride around the city of Chicago?
No.
So he was like this fellow lived in like a lower income area, and when I used to take the train from uh down Ogilvy Transportation Center downtown Chicago to the first suburb where I lived, right? It wasn't that long of a train. It was only 10 miles. It was a pretty quick train ride, but you would drive through the inner city part of Chicago, and you would see some guy in his backyard had some horses. I mean, it was his backyard.
Wow.
And yeah, and then
I
I
would have
guess
loved
every
that.
once in a while, this guy would just ride around, and it was a big deal. I remember, I think something happened though that put a kibosh on it.
Okay.
Something happened to put a kibosh on it. So you could look it up. The guy was called. He had a name. It was like not the Urban Cowboy, but something like that.
Horse guy, maybe.
Yeah, it was
Definitely.
fun. Yeah. Anyway, Nazi's looking the same time, a little bit of retracement, not quite as far down. R1 is way down here. Again, the volume profile is not helpful that much. And VWAP is pretty far down. 62.8 is pretty far down, but again, it's close to previous sessions highs. Again, that's going to be a little danger zone for me right now, but buyers are fighting right now. They're fighting this red candle.
Yeah, and I think if it again, it's kind of the same idea, right? If it stays up where it's trading right now, you've got a higher low than the previous icicle wick, kind of in line with this uptrend. To me, this might be a buying opportunity. Although I do see a lot of sellers coming in on the cumulative delta, and if there's no follow through, then those shorts get squeezed or those sellers get squeezed. So it'll be interesting to see what happens here if the market just stays where it is and continues on this uptrend, or if those sellers are in fact correct and put pressure on this market to take out that icicle wick. I think that's that icicle wick is, again, just like the E-mini S&P, an important target to determine if we're range bound or even going to turn around, or do we just stay within this uptrend?
Yeah, and there is a correlation I'm noticing, Tom.
Yep.
And that is the equity markets seem to rally when the FOMC members are in their quiet period and they don't talk. You guys just shut up. Everything's gonna be fine. Oh my gosh.
Well, along those
Yeah.
lines, Janet Yellen spoke yesterday, and the market pulled back a little bit.
It's fascinating, right? It's almost like clockwork.
Yeah.
Right. She will do a major speech on the economy in the quiet period. It happens all the time.
Right.
I'm not criticizing it. I mean, it might be the best place to get your policy ideas out, status of your policies out, because there's less noise in the atmosphere. So I don't blame her for it, but I'm just saying it seems to happen.
Yeah.
All right, let's go to the Dow. Dow's up 39, which is pretty much unchanged in my book right here. A bigger sell-off on the opening range so far. But this candle's relative. Let's see how big it is. High to low. Well, actually, it's pretty big. 92 points. 92 Dow points.
Yeah, and brought back to yesterday's close, right?
Yeah.
I mean, look at that. Yesterday's close acting as support. It's, this kind of looks like, well, the Dow could be range bound. I think, now that yesterday's close becomes really important, right? Do we
Yep.
do we make a new opening range low in the next 20 minutes, or if we don't, it becomes that becomes the opening range low, and now you're kind of in this area where you have two reasons why the market, if we break it, we're going to zero.
That's right. That's right. And we're on our way.
Right.
So again, this is the weak link so far. Let's go to the micro. Let's go to the Russell 2000 on a 10-minute chart. Here again, we see a kind of a weak looking volume profile. Again, it's immature. It'll fill out as we go, but a pretty nice sell off here and that first 10-minute candle.
Yeah, and I see this, if you go from the low at about 430, where you have that nice reversal pattern, that 3-bar reversal pattern,
Mm-hmm.
you extend a trend line to the lows, you can see the next peak lows, that kind of thing, or trough lows, whatever you want to call it.
Yeah. So something like this.
Maybe, yeah, something like that.
We're right there.
Like we're kind of still in this uptrend, right? Even though it looks ugly. The opening first 10 minutes, oh my gosh, that's a big candle. That's almost 100 points. Yeah, but we'll see if this trend line can hold.
Yeah. And yeah, we should trademark that ugly candle. Is that something we could do?
We probably could, although it's probably already trademarked, I'm guessing. Not for chart reasons, probably for actual candle reasons.
Yeah. So just to kind of, oopsie, let me get this out of the way. Oh, I'm not going to make it in my. I'm messing this up more than it's possible. Let me try it. Let's try this again, Tom. I'm
Yeah.
going to do the I'm going to do the ruler. I'm going to go from the wick up,
Oh, yeah.
and
Yeah.
I'm going to go to the bottom of that red candle. And I'll move the flag over here somewhere. So we that was a 10, almost an 11-point sell off from that peak down to where we ended previous candle.
Oh, 11 points, right? Yeah. Did I say 100? No.
No, no, no. You didn't say anything. I just thought
Okay.
instead of, it's easier for me to do this than to do the math in my head.
Right, right, right.
Because the math in my head, first of all, well, it requires a lot of energy. Let's just say that a lot of brain activity, and I'd rather save that for something else.
Got it. So
All right,
just so you
yeah,
know, Jim,
yeah,
the range today is about half an ATR, half an average true range. So there's room for this market to extend up or down
yeah,
and be
yeah,
well within an average trading range. With not a lot of big impactful news, though, it wouldn't be surprising if we don't get to an ATR today. That's not a bad thing.
yeah. No, I hear you. So we'll see. We'll see where it goes. Kind of right in the middle right now. Let's keep moving though, Tom. By the way, Tom,
Yeah.
who's here with us today?
Oh, we've got a great group. We've got
Ooh.
Aviator and Miho GDP 29. I think I'm going to get to the point where I don't even have to look at the screen. I see Miho. I know it's GDP 29. James is here. J-Man, same thing, 2005. I know that. Mom and Dad Cags, good morning. Robert W is here. Mark R. Raleigh, Nola Boy, Coder for Traders. Gary, Engineer Bear, ILDE Amador, Infinitely Anissa, good afternoon. Eric H, Error H, Scott K, Bow Hunter, AA Ron is here. R. Crawford and Imran Alam is here. The Lieb, Thomas Bolatow, Jen P, Ames, Jeanette, Mario R, Eagle for Money, Eugene Burku. I'm going to say that right, I hope. Welcome. Foggy Cape is back. Mac Rangers is back. Sunny and Hida are back. Quincy S, Psycha Claire. Those look like new names. Thanks for coming. Mr. Freeman is here. Brad F. And Stephen Rios. We've seen that name before, Jim. All great, great people joining the chat.
Yeah, I second that motion. Thanks for being part of this community. You guys have really done a fantastic job. Appreciate everybody supporting everybody in this very difficult task called futures trading. So thank you for being with us. Greatly, greatly appreciate it.
You said difficult.
It is difficult.
Yeah.
It's not easy. I mean, if it was easy, we would be doing this from a lounge chair at Burke's house in southern Florida, drinking pina coladas or whatever you like to drink. It's that
Yeah.
easy.
Right. Right.
We should do that anyway. Broadcast live from Mike's backyard. I think we can get travel for that.
He'd be like, get out of my house after a day. What are you doing?
No, we would just show up. We'd be in this backyard. He'd be like, "What are you guys doing here?"
Yeah.
All right. He's like, oh, he's changing the locks on his gate right now. All right, let's go to gold. Gold's well, higher high, right? First thing I noticed off the bat, Tom, swing high, 1:30 in the morning, a higher swing high. It's the very first thing I noticed. Now I don't know if that means anything or not, but it's gold is a little bit strong still, even though we're having again this kind of systematic retracement that's going on across all the asset classes right now. But that's just normal.
Yeah, it looks like a very there's a trend channel there as well, but it's very the slope is very, it's not steep at all, I guess. Trying to think of the word. It's almost horizontal, but it's not. It's got a little bit of an uptrend to it.
This kind of guy?
No, I'm going way back.
Way back.
Connecting your peak highs. Right.
Okay.
I'm going.
Right, let's try it again.
I'm going full.
Well, and then we can look
session.
at divergence or convergence on the RSI. But let's do that. All right. So reset. All right. So from here, starting here.
Yep. That's fine.
Going here.
Yep. Just
clicking
down there. Yeah.
Oh, look at that.
Yeah.
How do you like them apples? It's nice.
So if you want a range to trade, if you think today is a trading range day, because we didn't feel very bullish or bearish on gold, right? It's been kind of stuck in a range.
Yes. Good point. So that's a $14.40 range.
Yeah. So, you can trade accordingly, let's say, right? Now, if you think this trend is going to be in play, you have a target, lower end of that trend channel, or some percent along the way. You can use Jim's Fibonacci harmonic tool and mark the distance from top to bottom and see where that is, where those levels fall.
And we're gonna do some magic right now, Tom. I'm doing an anchored VWAP.
Okay.
From this latest trend, and we're right up against it, which I love. I love that. So not. Oh shoot! Did I just move it? I did. I gotta slow my. No, I can move it back one.
There we go.
So this is again. My Brian Shannon's coming out. This is a retracement back to the anchored VWAP that was established because of the trend that we had up that started pretty much at 8 o'clock this morning. And this is a touch point, right? And touch points could be one of two things, which is I'm going to state the obvious, but there could be poised for a breakout, or we could be it could act as support. We need a confirmation candle right now. We did touch it, but that's I think this is a kind of a way to apply the anchored order flow anchored VWAP.
Right, exactly.
So, and coincidentally, we're right about 50% retraced. So, where are we at here? We have nothing but time. Let's go. Did we talk about crude oil? Yeah, we did. Of course we did.
We did on a daily.
Yeah, we didn't do it on a 10-minute. Let's get that guy going.
So remember, crude had a big sell-off, and now we're seeing if crude can regain a little bit.
Yeah,
some of its sell-off.
I'm doing that. I'm doing that anchor again, Tom.
Sellers in control.
Yeah, I mean, from that point of view, for sure, sellers have kind of taken over right now. In this, we only have 10 seconds left. Let's stay here, 10 seconds for this candle to finish. See what happens. RSI is, 48, 47 and falling. This looks like a pretty decent sell off in the making, maybe. We crossed through the second volume weighted average price.
We
Could
tick
be,
through it, right? We wick through it.
yeah,
Now we're
yeah,
kind of trading right north of it.
yeah.
Now this kind of this reminds me of gold too, right? Like maybe a little more bearish than gold, but
Uh, well, actually, I'm going to change my fib line here. I'm going to take into account. I'm just going to analyze the latest nonstop trend, right? So what I'm doing, I'm ignoring this little
pullback. Yeah.
retracement, right?
Yeah.
Pullback. Yeah, there we go. Correction. And I'm I'm starting it at 610 candle, and I'm going all the way up to this peak high here right above R1. So this is the section I'm analyzing, and we'll see where we retrace from there. And right now we're like, all right, 50%. Yeah, we closed below 50%. 62% is definitely on my radar screen here. It's kind of an important number. And that would be about where we'd get that confirmation candle if, in fact, we do close below the session VWAP. And I'll just draw another thing right there. So that could be a signal to go short.
Yeah.
So
Yeah,
even,
I would say let's come back to this at when we look for trades.
we'll come back to this. I think that's a good thing that's a good suggestion. It's easy to do. I have my market analyzer, Tom, linked to the chart. So it's easy. I just click on we call it the market analyzer because it does so much more than just a quote board. But people, if you're brand new here, you're going to say, oh, there's a quote board. Well, it does a lot more stuff. That's why we call it the market analyzer. You could add columns with different, with the VWAP, right? You could show your VWAP in a column. You can color code it. You could, do all sorts of other stuff with this. So, but I have it linked. The point is, I don't, if I want to look at copper, I'm just going to click on the copper, and it'll pop in to the chart, and it will keep all of my settings, my order flow volume profile, my pivots, everything, except for the drawing tools.
Right. By the way, Jim, we didn't talk about the news that came out.
Oh,
so
yeah, what happened?
So services PMI came in as expected, 54.8. The composite was a little better. This is the S&P numbers now. This is not ISM. This is S&P.
Yep.
Composite beat the forecast and increased over last report. So 54.5 versus a 54.2. And last report was 54.4. So ticking up instead of ticking down. We'll see if the ISM reflects that or if they have their different set of numbers. But that could explain, if we look at, let's say, the E-mini S&P, you'll see that when this came out, there's a big seller's wick on that bar.
Yeah, let's go back to that. Let's go back to the E-mini S&P and look at that. And so composite, Tom, is pretty much, it combines the services and the manufacturing, right?
Exactly.
There's probably some sort of CMT equation for that.
Well, we had the manufacturing come in earlier this week, right? And then we had services today, and then they can determine what that composite is.
Yeah. So
both pieces. Yeah.
This was released.
That exactly.
This candle right here. So let's take a peek at that. Let's open this up a little bit more. So previous candle, that's what happened, right? So, but interesting, Tom, it almost seemed like, oh, let's rally. You know what I mean? It's like, oh, let's rally here. And then, they came to their senses and came right back down to where we started.
Right. So if you wanted to see, what that was at 9:45, it was a little bit of a tick up. So into that report, market was rallying I went to a 1 minute chart, but you can go to a 5 minute chart as
Oh,
well.
okay. 1 minute. All right, we could do 1 minute. Let's do it. Oh boy, now I got to figure out. All right,
Okay,
so
so you see
bear
that
with me,
doji.
everybody.
You see that doji right there.
Yeah,
Oh,
yeah,
go to the
yeah,
left.
yeah.
About 5 bars before, 4 bars
Down
before.
here. Yeah,
There you
there
go.
we go.
That's your 941 candle. That's the start of the candle that we saw. That was like really had a really huge seller wick. Market was rallying into that number. 945 it comes out.
Mhm.
Right. So 945 it comes out. So that's the next candle is when it came out.
Yep, it comes out
Little
here.
little bit of
Yep.
confusion, right? This is good or bad.
Mm-hmm.
And then it just turned around.
So this is a good lesson though, because the number is released. We had, a rally up to 74, 75. We had a breakdown to 20, 25. After a minute, the market said, okay, I don't know what to do. I'm going back to where we started pretty much, right? Pretty much, a
Yeah.
couple ticks away. And then started trickling down. So now it's like, all right, we're assimilating this information. Minute 2, minute 3, minute 4, still not sure. Then minute 5 and minute 6. All right, we're selling off. And that's a good lessons learned, because it's like when you're trading in front of a number, you're not the only one that doesn't know the direction. Once the number comes out, the whole market doesn't. And then eventually, the mass collective has an opinion, and it drives price.
Yeah.
So don't randomly put trades in front of a number, people. That's my advice.
And we've got another number coming up.
Yeah, 10 o'clock.
10 o'clock.
3 minutes. I think 3 minutes. Yeah. 3 minutes, 4 seconds. Anyway, we're right at the Tom, we're right at the session VWAP. Again, I'm going to draw another one. I'm going to draw from the recent lows. I'm going to draw a anchored VWAP, and we'll see what that's bringing us in terms of area support or resistance.
Ooh.
We're right at it.
We're right there.
at it. Yeah, we're right there. So it'll be interesting. After the opening ranges, the other thing that's interesting so far, well, we'll see if this candle, are we going to have two? It's the weirdest possible doji we could have here, right? We could have a doji with a huge wick on the top and a huge wick on the bottom if you were to put these two 10 minutes together.
Right. Look at how nicely though, Jim, that anchored VWAP has held as support.
Yeah.
So it wicked down. What is that? Right after 7 o'clock. It wicked down to the VWAP twice.
Yeah.
Got a bid, and then it came back down again. And then at the right before the news, right at the open, we have the dominant candle that went right to the VWAP, anchored VWAP.
Yeah. We did it again here. Oopsie.
Now, some of that, that anchored VWAP will change with volume. Not so much price at this time because of how much volume there is. Mm-hmm. But at the